Donald Trump recently urges people to buy stocks, claiming the US stock market will go straight up like a rocket ship. He attributes this optimism to new trade deals and proposed tax cut packages, which is currently being deliberated by the House of Representatives. On Thursday, Trump announced the US-UK trade framework, calling it a breakthrough. While it's still under negotiation, the framework aims to reduce the trade barrier and increase the market access for American export in agriculture, energy, and industrial goods. Key features including faster custom clearance for US product entering UK and a continuation of the 10% universal tariff except for steel and aluminum and aircraft engine parts, which will be reduced to zero tariffs. So just give you some context, just in case you forgot. On March 12th, Trump actually imposed a 25% tariff on all steel and aluminums from foreign countries. So right now it's cut to zero for UK. So UK Prime Minister Starmer described this deal as a job-protecting and job-creating deal. So the UK automaker will now be able to export 100,000 vehicles to US at a reduced 10% tariff, down from 25%. Right. So if you this 10% is still higher than the tariff imposed by US prior to Trump's second term. That it was 2.5%. But remember, this 10% relative to other countries, it's low, right? The other countries are facing 25% tariff on auto imports or on exports to US for automobiles. The Rolls-Royce parts, because they make plane engines, they will also be tariff-free. And also a major British airline is expected to announce a $10 billion Boeing purchase. Critics argued that this is just a framework, it's not a real trade deal because the details are not resolved yet. But however, the announcement appears to be a strategic because U.S. wants to show the global progress in the trade talks, trade negotiations, and signal to the countries such as South Korea and Japan, where the trade talks are going very slowly. There's very little progress, right? So U.S. want to use this to get those countries to move forward quicker, to show them that once you get the trade deal done, see how some tariff can be lowered to zero, right? And also the message U.S. is showing to the world is that cooperate with U.S. and you will benefit. And if you resist, you will face high pressure. So China is an example that reinforces this stance. China keeps on retaliating on the reciprocal tariff, and U.S. just keep on putting more and more on top of it. And now China and U.S. are not doing any trades, almost zero trades, because the tariff wall is so high. So pretty much U.S. is urging the world to not follow suit with China to resist, but follow UK to cooperate with US. Looking back at the market, so the top chart here shows you the VIX fear index. The bottom chart shows you S&P 500, the broader market index. The VIX peaked, right, on April 8th. This peak fear theory that we mentioned very early on, actually before Tom Lee, it's playing out nicely, right? The peak of VIX is on April 8th, and it hit 60. It's very rare for VIX to be at 60 level, right? It probably happened once or twice a year. So since April 8th, the VIX has been cooling off while the S&P 500 has been recovering. So from the bottom until today's level, it's recovered about 14%. Because the logic is very simple, right? On April 8th, where China and US pretty much decoupled, was 145 and 125% tariff. What can go worse than this, right? Right, U.S. Announced a 90-day pause. The European Union was pausing on the retaliation. So what can go worse than the April 8th, right? It's very hard to go worse than that unless the two countries has a physical war, which is very unlikely. So under the current conditions, the Federal Reserve is taking a wait-and-see approach. Fed Chair Powell used the word wait 22 times during the May FOMC press conference, citing significant uncertainty and particularly around fiscal policy. So he's saying Trump's policy because fiscal policy is implemented by Trump's team. So he's saying Trump's policy is causing a lot of uncertainty for the monetary world. While the current labor market remains strong and the inflation appears to be controlled, elevated inflation expectation is actually driving the Fed's cautious stance, causing it to not cut rate. However, Donald Trump has criticized Powell for being too slow on rate cutting. So current data shows that the headline CPI over here is actually down to 2.4% compared to a year ago. The core CPI is down to 2.8%, while the interest rate remains at 4.25 to 4.5%. So this appears to be relatively high given today's cooling inflation picture. This is actually mirroring Powell's monetary policy during the early years of the pandemic, where he relied on expectation to set monetary policy, such as he used to say inflation was being transitory while the CPI, the actual hard data, was going up. He wasn't raising rates. He wasn't tightening monetary policy because he believed in that expectation that inflation was transitory. So he loves to set policy based on soft data, expectations, rather than the hard data. But now looking at this, again, if you think about it, the hard data, the inflation is cooling off. The policy rate is stuck. He keeps on waiting. He's not lowering the rates because he's doing this based on expectation again. He's thinking the inflation expectation, the survey, the soft data are high rather than the actual facts. So there is a possibility that Donald Trump is right and Powell will be late again. The next major trade deal on the horizon is likely between US and India, where the negotiation is currently underway. India is reportedly proposing elimination of tariffs on select US imports such as steel, auto components, and pharmaceuticals. However, the talks are expected to be lengthy and complex as it involves revising tariff policies across thousands of product categories. But once the trade deal is announced in the future, I think the deal will be acting as a fresh catalyst for the market rally. I think it's going to be a particularly significant agreement as India is now the world's most populous country. And what that means is India consumer market is huge. So it's going to potentially offer US expanded access to one of the largest consumer market in the world. But the most closely watched trade talks right now is the one between US and China, and of course the one between US and European Union. So the one between US and China will happen this weekend. The US and China will negotiate in Switzerland, and Trump has expressed optimism. He said, right now you can't get any higher. He's talking about the 145% tariff. He said that he knows it's going to come down, and he thinks it's going to have a very good relationship with China. So we are actually seeing urgency for talks for both countries because both countries are feeling the economic pain, right? Because Chinese exports to US has dropped by a third compared to a year ago. This is actually leading to a potential job loss of up to 16 million people, factory shutdowns, and a GDP hit of about 2 to 2.5%. In the meanwhile, the US is grappling with consumer price inflation and potential supply shortages, and CEOs of Amazon and Home Depot actually went to Trump and threatened or warned him about potential empty shelves. But I think they're just being dramatic, just want to apply pressure to Trump to get the trade deal going quick because China is not forbidding the export of its Chinese goods to US. It's Trump that implemented a tariff on the importers of the country. So Amazon, Home Depot, they can still buy stuff from China. They just have to make it more expensive. For example, if a pencil was 50 cents, they can now price it at $5. Just push that cost on the consumers. So it shouldn't result in an empty shelf. It should just result in very high inflation price, CPI. But they don't want to do the import right now because they know Trump is going to lower this tariff because they know there are going to be a de-escalation like this happening soon. Because if they're going to eat the additional tariff costs right now, they're going to just import anyway. And a week later, the tariff gets halved. What are they going to do with all those expensive goods, right? And Trump signaled his urgency, his eagerness to de-escalate trade between China and the U.S. Through his posts on Truth Social today, he proposed reducing the current 145% tariff down to 80% and urged China to open up its market to U.S., stating that closed market won't work anymore. So according to sources familiar with the matter, the U.S. has two main objectives for the upcoming trade talks this weekend. One is to reduce mutual tariffs with the goal of bringing them down to 60%. The other one is to push China to lift its export control on rare earth minerals because it's already causing disruptions on many key U.S. industries. If I have to predict the outcome, I think it's going to be positive, which is my base case. The worst case is that nothing happens, right? That the trade barrier stays as high as what we currently have. Because at current high level of trade barriers, the relationship can hardly deteriorate further. Like 145%, you increase that to 165, that's not much has been changed, right? So the likely outcome is going to be either positive or neutral. So there is a minimal risk of further escalation of the trade war. But I think the current potential source of market fear will be coming from the US-European Union trade negotiations set to happen next week because the European Union has kept on flexing its cards, its muscles towards Donald Trump, saying that how they have all kinds of retaliation measures. For example, they can tariff Boeing aircraft, they can tariff US-made cars, and even the American services sectors, right? Like the Google services, the Apple services, they can tariff that. The US is actually currently running a services surplus with the European Union. So European Union also plan to file a case with the World Trade Organization over reciprocal tariffs. They're actually following China's example last month because they filed a complaint on WTO a month ago. So this negotiation poses a market risk due to EU's a visible preparation for escalation, right? They are thinking this through. They are ready to fight if it has to. So if the tension rises, it could strain the US-EU relationship and potentially push EU closer to China. And EU is the second largest economy. China is the third largest economy. But of course, if China and EU gets too closer together to work against US, it's going to be very difficult for US. And naturally, China and EU are supposed to be together closer because of the trade barrier. Because China and EU trade barrier hasn't changed. But US and China and US and EU trade barrier has been increased. So naturally, Europe and China will have to do more trades. Especially China is now looking for new consumers after US, after losing so many American consumers. So naturally, they will have to try to export that stuff to Europe, pretty much exporting its deflation to Europe. And China has also been lowering its exchange rate. A weakened yuan will make their stuff even cheaper. And of course, that's going to likely hurt the local manufacturers in Europe. However, I think the risk is limited. The reason why is because if you look at this thing on a bigger picture, strategically, right? Right now, the Trump administration is targeting, focusing on China. The previous administration was focusing on dealing with Russia. But it doesn't matter whether U.S. is dealing with China or Russia. They're both benefiting Europe. Because China and Russia can be seen as one entity. They can be seen as one organization, one country. They have no limits relationships, just like European Union, formed by many countries. But they can be seen as one country now, right? Because China, during the Ukrainian war, China has been supporting Russia economically and technologically, right? Despite to help getting Russia through the Western sanctions. So European Union most likely is aware that if it's aligning too closely with China, it would be indirectly supporting Russia. Right? But of course, unless China is able to give some sort of security guarantee. So therefore, I think European Union will tread cautiously, and the risk right now seems to be limited.